Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the Chicago office on a very rainy Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and from good old Champaign, Illinois, Professor and the Lawrence J. Norton Chair of Agricultural Marketing at the University of Illinois, Dr. Scott Irwin. Scott, how are you today?
I'm doing well, thank you.
You are getting the same rains and storms that we're getting up here, correct?
Absolutely. It's been a thunderstorm train since early this morning at some point.
Oh, yeah. It got an early start. Tons of lightning. Dog was spooked. Kids were a little bit sloppy going to school, but things have been a little drier, right? I suppose in certain parts of the Midwest. So we'll certainly take the moisture here. Jake, how are things in Kansas? There's no place like home. There's no place like home. There's no place like home.
Sunny skies, light breeze, and warm weather here.
Look at you, Jake. Everywhere you go, you've got that warmth. You just bring it with you, buddy.
I don't know what to say.
You're just a walking ray of sunshine, aren't you, bud?
Mm-hmm.
Jake, have you ever thought about Kansas? Have you ever looked at Arkansas and just thought, hey, man, that's Kansas, but you just slapped an AR in front of it?
Yeah. We had the river first. It ends over in that part of the world, but we've had it first. It's the Arkansas River here in lovely Wichita.
Beautiful, dude. I love that attitude. Well, we have a lot to run through, especially with Dr. Irwin today. So, Paige, if you would kindly timestamp the broadcast. It is Thursday morning, and as Scott and I mentioned, it is raining here across the I-States. We got some big storms across Illinois, and as we used to say on the trading floor, it's raining on LaSalle Street. Therefore, we all know that rain makes grain, so corn's got to be trading lower today because it's almost spring after all. And we're looking at May corn futures. They're trying to flirt with that 435 number here this morning. They've been on a little bit of that slope almost. We had that nice little peak up near 445 earlier this week. We've kind of had that maybe a little bit of a rounding pattern, perhaps grasping for air on this rally. And I think the rains have brought some nice pressure into the marketplace here this morning across grains at least. We've got December corn pushed back towards 470, which has been an interesting number for our new crop targets here thus far. We look at beans still holding their own. We got May holding $12 a bushel this morning. Nove is trying to get to 12. We're at 11.90 here. So we're watching that figure very closely for our good old new crop beans. And then meal, stubborn little byproduct. It was up a decent little chunk as we started the day today, but we're back up just about $1.50 to $2. We've got May meal at $3.38, let's say, maybe just a tick below. So watching that market closely this week. And of course, as always, for Mr. Jake Kingsley. So between the corn and feed and crush and all things that Jake watches very closely, we're honored to have Dr. Irwin with us today because, Scott, we are all avid subscribers and readers to the Farm Doc Daily. We love watching, short YouTube blurbs that they post daily, but also they have some lengthier webinars that we watch. And of course, you have your own site and blog that is associated with some of those as well. And I think about a month or so ago, you made note of the ethanol industry and what a year the ethanol industry had in 2023 in terms of operating efficiency and profits. So, Scott, would you mind touching on that for a moment, and then maybe what things are looking like ahead for 2024 for those folks?
Sure, be glad to do that. 2023 was the third in a really great 3-year run for the ethanol industry. Each of the last 3 years, so we're looking at 21, 22, and 23, we're kind of in the top third of profits for an ethanol plant, at least based on the model that I use. It's been a really nice run for the ethanol industry. It's not quite as near the record profits that we saw back in 2014, but still very healthy margins in that industry for 3 straight years. So that's the good news. But things really tailed off in the fourth quarter in terms of their margins as ethanol prices retreated relative to corn prices. And so we're back to basically kind of a break even, maybe a small positive margin in that industry right now. The outlook is probably for a return to more normal, near break even profits as we look forward in 2024 for the industry. But there's a lot going on in the ethanol industry that I think are super interesting. That industry has made a lot of investments in the last decade to improve their operational efficiency. We're now getting about 10% more ethanol out of a bushel of corn than we were, say, 10 years ago. There's been some nice efficiency gains. And of course, that industry is really looking forward to kind of the carbon and environmental markets for their future. So it kind of looks a little bit like a steady as she goes, status quo industry. But if you look behind the curtain, there's a lot going on.
Yeah. And so, like you said, it's not like 2014, but it was still a really good run for these guys. And it does sound like maybe most of them are still at an above break even. And we, of course, we watch the crude oil market and the energy markets very closely here. I think it's interesting that crude at least finally has rallied up through $80 a barrel on the near side. That's kind of been a key resistance level here lately as the market kind of bounces against that ceiling a little bit. So still in a longer term uptrend for crude. We got to watch that as we move forward. I think it's really interesting, your notes, Scott, in terms of the efficiency from these guys, able to pull more from that same bushel of corn as we move forward. What does that mean exactly then for the DDG production of these guys? Are we sacrificing either quality or amount of the protein that is then a byproduct of this process?
Yes, as we economists are fond of saying, there are no free lunches. And so if you get more ethanol out of a bushel of corn, you may have some overall gains in efficiency. But of course, there is the cost of getting less DDGs. We're getting around 2 pounds less DDGs per bushel of corn than we were a decade ago. But we are also getting a lot more corn oil out. So I suppose from a livestock feeder's perspective, there could be some less quality also coming out of those DDGs bushels as we extract more oil from the byproduct. It always depends on your perspective a little bit, I guess.
Certainly. We get a lot of questions from the industry in terms of, I think one of the big talking points, at least, is the sustainable aviation fuel. And a lot of folks call us and say, well, this is great for the corn market, right? Like we're injecting life back into ethanol, like corn's going to start flying airplanes. We think maybe we're still very early on in the game for that kind of talk just yet, right, Scott? I mean, we're working our way there. I think that's ultimately a goal, but this is not happening next week or anytime soon, right?
That's right. I think it's really important to have a timeline in mind about how this might happen. I don't have any doubt that if we're serious about decarbonizing, that's the phrase people use, lower carbon fuels for jet airliners, that ethanol being converted into jet fuel more than likely will have a strong role to play in that in the long run. And that's, of course, of great interest to the ethanol industry because we know that gasoline demand and usage is probably near a peak as we adopt more and more electrical vehicles for regular consumer use. So, the hope is that there can be kind of a great replacement going on there of sustainable aviation fuel for lost, basically, car demand for fuel. So that's the long run. But from a technology standpoint, there's exactly one pilot plant that has been opened up in Georgia, the LanzaJet facility, and it's not even operational yet. And if it works, it will be producing at most, I believe, 8 million gallons in a market for jet fuel that is someplace in the low 20 billion gallons a year just for U.S. carriers. So the way I like to put it, we haven't even gotten to the starting line yet for SAF being a significant market driver for corn. My guess is that that market is at least 5 or 10 years away from being a really significant driver in the grain market. Potentially bright future, but it's a ways down the road.
Okay. We appreciate the insight there because, yeah, a lot of people certainly ask because they think that, maybe this is something that comes online in a year or two and really alters the marketplace. But I think that 5 to 10 year timeline is really important to keep in mind. Jake, when it comes to, these ethanol discussions, Scott noted that, the efficiencies of these plants, it potentially, does ultimately alter the amount of DDGs being produced. It could certainly alter the quality of the protein itself. That market has certainly shifted a bit. I think you've been telling folks that it's been a little bit late to the party in terms of markets breaking, right? It hasn't quite chased the corn and soybean meal market lower, or at least maybe not as fast as they moved lower over the past, let's say, 2 to 3 months. Any insights on that front for our DDG buyers and feeders?
Yeah, I think that's right, Jim. Actually, over the last couple of weeks, DDG values have started to decline in a pretty meaningful way. In a lot of places, $25, $30, $35 a ton, lower than they had been back at the start of the year. So we are starting to see a break. But as Scott talked, there are some quality concerns around that. There's a little bit less energy, and all of these different distillers' products, or just depending on the plant they come out of, have a little bit different energy quantity. They have a little different protein value to them. So there's enough variation there. They really have to work their way into the ration and be kind of a leader on nutrient value before I'm comfortable going out and owning them for any long-term type of contracts. We've been advocating for folks to own 30 or 60 days worth if they need to just keep logistics flowing and take advantage of this recent breakdown in price. But I think there's still more work to be done on the price front for those over the course of this summer.
Okay. We'll keep an eye on those as we move into the summer, as you said. Hopefully, we can ultimately achieve some of that downside before folks really need to step in and maybe buy some longer term stuff. So we'll stay somewhat nearby in the meantime for all of our dairymen out there. Scott, if we could come back to you, let's turn her over to the renewable diesel and biodiesel discussion, because I think the last time you were here on the show, we talked about the potential for this industry to have maybe gotten a little over its skis a bit, right? Everybody was talking capacity. We still are. That is still very much a day-to-day conversation. A lot of our friends in the industry is, the capacity will be there. The capacity's there. It's, and there's more to come in the next couple of years. But as you noted, the capacity was, in your eyes, getting way ahead of actual demand for this stuff. And I think the way that maybe some of the pricing on credits have looked over the last, let's say, few months. I think you called your shot very well on that one. Any updates for us on that market here this morning?
Great. Well, there's so much going on in that space. I'll just try to be brief, hit the highlights. The industry is definitely going through a rough patch. They've seen the RIN credit values, as we predicted, have collapsed from almost $1.80 when we were starting our analysis to a low of 40 cents. And that comes right off of their bottom line. And so you see the earnings statements for these companies in there that are producing renewable diesel are down sharply year over year as they have experienced this rough patch. So that's what's going on. But what's interesting from a feed perspective in particular is the expansion, because these things are huge, expensive, basically refineries. There's a 4 or 5 year timeline to build one. They're still coming online, and two of the biggest ones are coming online in 2024. So that capacity is still building. I think probably one of the storylines of 2024 will be the demise of more and more of our traditional FAME biodiesel plants as they're squeezed out by the newer, bigger renewable diesel refineries. That'll be part of the story in 2024. But overall, it's just an industry that's experiencing tighter or negative margins, so they won't be bidding nearly as hard for vegetable oils. But the good news is that there's still going to be a pretty strong foundation there, which means that we're going to need to continue to, for example, crush soybeans for the oil, and there'll be plentiful protein out there. So that's kind of the outlook that I see for 2024. What's really interesting is, I think, trying to get a handle now on a couple key developments that are going to have a much brighter outlook for the renewable diesel industry in particular as we head into 2025. The U.S. passed a law that will be converting the $1 per gallon blender's tax credit to a producer tax credit. Now, that just sounds like, just a bunch of marbles in your mouth when you say it, but potentially could have really large economic implications in the soybean complex, because what that means is we have been, because of all these incentives for renewable diesel and biodiesel, we have been basically sucking in huge quantities of renewable diesel and biodiesel imports, over 800 million gallons in 2023. We don't know exactly how much, but a good chunk of that is going to get shut off in 2025 because those imports into the U.S. will no longer be eligible for the tax credit. You have to have it produced in the U.S. So that's a big story. That same tax credit could also have important implications for our trade in renewable diesel, because it will make our renewable diesel cheaper, particularly to the export market in Canada, which is growing because they've adopted a low carbon fuel standard like California. So very rough patch in late 2023, 2024, but I think some interesting bullish factors are out there for 2025.
I think these are really important talking points. It's like we almost want to capture and timestamp this conversation here because, like you said, this will kick in 2025, but I think has very serious, potential implications here in the United States and the Northern Hemisphere, really in general, right? I mean, Jake, you're always talking about, the Canadian canola industry, the renewable industry up there, the canola meal production and supply from our neighbors to the north. So I think, as Scott mentioned, this potentially has a very large impact on what the relationship looks like between the two of us. So, Jake, let's turn it to you then in terms of, this obviously then impacts bean meal and canola meal pricing, both in the U.S. and Canada. What have you been seeing lately in either of those markets for our dairymen?
Right. I think for the most part on the basis front, things have been, again, relatively stagnant because I think protein's made a slide back near to what I would call a historically average basis range towards the end of 2023, and they've kind of hung in there. They're still $10, $15 a ton higher than I think where they could potentially end up by the end of this feed year. But the cost of doing business along those supply chains is higher, and all of this new capacity hasn't come online yet. We have added some capacity, but we're also coming off of a year where we had some thin soybean balance sheets for a couple of years, and we had some thin inventories in Canada as well, and we've kind of rebounded those. They're healthy now, but having the past so close in our rear view mirror, I think there's still some caution in the industry to revert all the way back to some market lows there. But over time, I think, this sets up very nicely for the feed buyer to have readily available protein products, likely at improving values, so long as we can continue to produce the input raw materials reliably here. And when we're on our way to doing that right now. So good opportunity down the line. We've had some great opportunity here recently with futures breaking down as heavily as they have. So folks have been stepping in, buying some stuff for the next 90 days or so, get out through June. Still potentially more opportunity, even in the short term, for the July, August, Sep window as South America works through their harvest window now and has a very nice crop coming off. Is it perfect? No. But it's a huge rebound from last year. And then we're now down to weeks or even days away from planting another crop here in the U.S. You guys are catching rain right now. The drought's over. There were people whispering the D word. It's gone. So I think we're finally catching some relief for the first time in a few years. That looks like we could set up for some good feed inventories for a little while here. So some more opportunity in front of us.
Yeah. And I think when we were all talking yesterday, we talked about how this is the conversation we're having with our dairy farmers of we envision this world where protein pricing is significantly cheaper than it's been the last 2 to 3 years. And the hopes of that is this greater picture of we do continue to expand capacity. We have this availability from the crush process. I think the difference, as you noted, Jake, between the soybean balance sheet here and the corn balance sheet here is that our corn balance sheet has now really over the last year or so, it's expanded enormously. The corn is there, right? Where the beans, it's just, has it expanded slightly? Yes. Are we over that hump yet? It doesn't feel like it just yet. Argentina, as you noted, Jake, certainly has rebounded over what it has experienced the last couple of years. There's still some concern out there as the Brazilian yields are, not quite as strong as they were just a year ago, but that was a record production. We're still, I think, looking at a very large crop down there. I think you're going to have folks like us on this crew here debating what the final Brazilian production number will be. Will the USDA ultimately chase some of the local numbers lower? Probably a little bit. I think we can, when we get closer to the next WASDE report, we'll do some bold predictions on that one. So I think we need to get over just maybe one or two more hurdles before we ultimately have that longer term relief on the protein market. And especially as we kind of digest these new policies that Scott mentioned as we do kick into 2025, how does that ultimately impact feed pricing on a much longer term basis? So really appreciate the insights there. And Jake, two things for you, buddy. You hosted the show last week while I was at the Dairy Exchange down in Florida. So kudos to you on a great job stepping in as the sub, hosting. You did an awesome job. And two, while you were speaking, soybean meal decided to go from, let's say $3 or $4 higher to trading lower at the moment. So just you and Scott together here speaking about this market, we're trading lower protein pricing for our dairies.
I am glad we could do that for everybody.
Always glad to help out my friends in the dairy industry.
With you guys, we've got corn and meal lower with it. I mean, this is, I don't know, maybe it's the perfect combo. I don't know. And we've got Jake back in Kansas for this show. Maybe that helps. And then we have Scott from the real U of I. I have to remind all of our friends from Idaho here, the real U of I is being represented today, right? So I think that also helps provide some magical chemistry here. But sincerely, a huge thanks to you both. Scott, thank you so much for taking your time, returning to this show. It's great to have you and your insights. We would also like to thank the EverAg Insights crew for their support. Thank you to Paige for her production magic. And thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.